Hello everyone, my name is Teresa and I want to welcome you to this new RankiaPro interview. Today we're going to talk about the role of metals in the energy transition and decarbonization, and also about how professional investors can take advantage of these trends. All of this with Benjamin Louvet, Head of Commodities at Ofi Invest Asset Management. Benjamin, I want to ask you, how is the energy transition influencing the metals market?
It's pretty clear, Teresa. The influence is really big. It changes completely the landscape of metals. Let me give you a few examples. Um, the when you look at some of the metals like silver, silver is has really specific chemical properties, and in particular, it is the best conducive metal in the world. And for that reason, it is highly used in some of the low carbon technologies, for example, solar panels, but also electric vehicles. And for that reason, it completely changed the demand of of this metal in the past few years. Uh, let explain this a little bit. In 2010, the solar industry and the electric vehicle industry were only nascent. Okay, it was only the beginning, and at this moment, so the demand for silver was 0% coming from these two sectors. In 2024, these two sectors, solar panels and also electric vehicles, altogether represented more than 30% of the worldwide silver demand. So it completely changed the landscape. Why? For a simple reason. People have to understand that one thing that is really crucial. You can't make electricity with wind or sun. You can't make electricity with wind or sun only, I should say. And you need a transformer that will convert the energy of wind or sun into electricity. And this transformer has to be built, and to be built, you need metals.
Thank you, Benjamin. You started speaking about silver, and I think it is important to know that in 2024, silver recorded the best performance amongst all commodities, thanks to the, as you said, increasing demand of the industrial sector for the production of photovoltaic systems, wind turbines, electromobility. So, what are your predictions for silver in 2025? Do you think it is going to be as brilliant as the last year?
Yeah, I think it could be the case. The first thing I want to mention on this is that 2024 was indeed a really good year in terms of performance for silver, especially because when you look at the supply and demand balance on this market, uh, the, the the silver market was in deficit in 2024 for the fourth year in a row, and we know for sure that in 2025 it will be again in deficit. So that means that we have to use inventories to balance the market. But as long as you are in deficit, you will see more and more difficulties to balance the market, and so the price should go up. Let me add something. When you look at the the historical prices of precious metals, you will see that in 2000, gold price was at $250 an ounce, and in 2011 it was at $1,900 an ounce. On silver, in 2000 the price was around $8 an ounce, and in 2011 it was at $50 an ounce. Today, the price of gold is around $2,900 an ounce, and the price of silver is still at $33 an ounce. There is still a big gap in terms of performance between those two metals, and we think that that silver will finally fill the gap at one point in the future, and probably this year we could see a price rise, uh, making the price of silver going in a range between 37 and $40 an ounce. So more than 20 to 25% performance this year again, we think.
Thank you, Benjamin. And what can you tell us about aluminium? Because this is a lesser known metal, but one that plays a key role in the energy transition as well. So, can you tell us about the main applications of aluminium so our investors can understand a little bit how it works?
Yeah, aluminum will be a really important metal in the coming years because of the energy transition. First, we will need it for electric vehicles. We will need it for electric vehicles because as you embark batteries in an electric vehicle, it is heavier, and so you have to lighten the vehicle. And for this, you will replace steel with aluminum wherever you can. Okay, in order to lighten the vehicle. You also need a lot of aluminum for the solar industry. You have to know that almost 80% of the weight of a solar panel is aluminum. Okay, so you need a lot of this here. Uh, in complement to that, there is also something really important with aluminum, which is the supply side. Uh, China is a main producer with more than 60% of market share on this market. Okay, but China, for ecological reason, because it is highly polluting to produce aluminum, and also for energy consumption reasons, because it takes a lot of electricity to produce aluminum, decided to cap the maximum production of aluminum in the country. And we are now close to this cap. So that means that the biggest producer in the world will have to reduce, I mean, the growth in terms of, of production will start to stall. And at the same time, the growth in terms of demand will still go higher. So we will have a problem. And more than this, we have a second point that is really important. Uh, you know that now we are in a trade war between the biggest economies around the world, and especially now that Donald Trump is there at the presidency in the United States. And because of this, China used some leverage to influence the negotiations. And one of these leverage was that in December, they announced that they will cut the exemption of tariffs to the exports of aluminum, which means that probably exporters of aluminum in China will reduce the volumes they send to other countries, and that will probably create tensions on this market. So probably the price of aluminum could go higher in this year.
Okay, that was very clear. So we talked about silver, we talked about aluminum. Another winning metal in the transition energy is copper. In fact, according to the International Energy Agency, its market grew but 50% between 2017 and 2022. So what characteristics of this material have favored this growth?
I used to say, Teresa, that copper is the Swiss knife of this energy transition. You need it everywhere. Let me give you a few examples. In an electric vehicle, you have 4 times more copper than in a thermic engine vehicle. You need between 950 kilos and 5 tons of copper in a wind turbine to make the alternator mainly. So you need it everywhere. You need it also for the grid. For a long time, people forgot that developing renewables is a really good idea, but if you have no grid to transport electrons, you will have a big issue. Let me be clear on this. According to Bloomberg New Energy Finance today in the world, you have 70 million kilometers of lines for electricity. Okay, we should raise it to 140 million kilometers if we want to deal with this energy transition. That is the distance between the sun and the earth. Okay, so you can imagine the quantity of metals that are needed here. Uh, Here we are probably where we have the biggest issue, because we consume a big part of the copper that we have in the earth crust, and we also not have only a problem in terms of the size of the reserves. We also have a problem in terms of the size of the tap, the pace at which we will be able to get these metals out of the earth crust. Let me explain. You mentioned the International Energy Agency. The International Energy Agency mentioned in a report a few months ago that today in the world you have 250 copper mines that are up and running. Okay, when you look at the average size of these 250 mines, the IEA comes to the conclusion that you will need to cope with the new demand coming from the energy transition. You will need to open a complementary 80 new mines, the size of the average size of today's mines. Okay, but the problem here is that the IEA immediately adds that today, around the world, to open a new mine takes on average 17 years, 1 7, which means that according to them, all these new 80 mines should be sanctioned by an investment decision before the end of 2025. And today, around the world, you have almost no new mines that are under scrutiny in the world. So we have here a big issue, which leads to one of the report published by the International Energy Agency, where they say that according to them in 2030, we should have a supply gap of 20% of the copper market on the copper market. But I'm sorry, this is not true. Um, it, you can't have a supply gap on a commodity because supply and demand should be balanced. So that means that something will have to happen in order to balance supply and demand. What price have to rise? Okay, for a simple reason, and to trigger one of these two levers. The first lever, which is destroying demand. As the price is too high, some people will decide not to use copper. But in our case, it will not work that much because if we're serious about this energy transition, we will need to use copper. So you have to use the second lever and to trigger the second lever, which is to incentivize producer to produce more. As the price is higher, they have more incentive to produce more. But the point here is that, as I mentioned, you need 17 years to open a new mine. So the price will stay high for a long period of time, and this price has to rise quite quickly. Okay, so we think that the price of copper should rise for the years to come, and it will probably be one of the best trend we will see in the coming years. Uh, if I may add something really important, Teresa. Uh, Everything we mentioned here was published in some reports by the International Energy Agency or really well-renowned institutions. So you may ask me, okay, but if everybody knows and is aware about this, it's already priced in. The point is that in commodities, this is not the case. This is not priced in. Why? Because the way we price commodities is really different from the way you price other assets. When you price bonds or stocks, you use to value a company. So you will value at today's value future results. So you embark the future of the company. Okay. In the commodities market, it's not the same. You have a spot price. What does that mean? This is what we call at Ofi Invest Asset Management the tomato syndrome. When you go to the market on a Sunday morning or a Saturday morning, depending of your country, and you want to buy tomatoes, what will make the price of tomato? Not how much tomatoes you will have in 6 months from now. What will make the price of tomato this morning will be how much tomatoes do you have on the market this morning, and how much tomatoes do people want to buy. Okay, so it's a spot market and it never embark the future. It can't, in fact, for financial reasons. So uh, what is really striking here is that we have almost a certainty about the future demand coming from these metals, but it is not priced in. So it's really a big opportunity, according to me.
Thank you very much for those insights. They were very interesting. Actually, okay, so metals are crucial for the energy transition, obviously. So tell us, how can investors gain exposure to that materials within their portfolios?
You have different options, I would say. The first is that you can buy directly commodities in your portfolio, but it's not possible for for all investors, because you have some constraints in terms of restrictions in terms of investment. So it's not that easy. So then you can invest in miners or companies that are directly exposed to these metals. Uh, that's an idea, but it's not perfectly suited because you have a lot of discrepancies coming from the fact that you invest in a company. So first, you have a company risk. Let me explain it. If tomorrow the copper price is going sharply higher, but at the same time the copper mine you invest in is probed about some wrong actions, probably the price of copper will go higher, but the price of your mining company will probably go down. Okay, so it's not directly correlated. Then you have the market risk. You are still investing in stocks, in equities, and so when equities are going down, usually, and especially now that you have a lot of ETF, all the stocks are going down altogether. So you can see the price of metals going higher and probably your company is going down. So it's not that easy. Um, so you will not have a perfectly correlated performance. More than this, I think that in the coming years, miners will have to invest a lot of money because of all what we said before, and they will probably not be really in a position where they will be able to give money back to investors. Okay, so the last option, I would say, is the one we propose here at Ofi Invest Asset Management, which is to 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 put all these metals into a fund, make a diversified portfolio, and we will get exposed to the performance of these metals through a swap. For legal reasons, we can't have any delivery risk, so we can't have direct exposure. So we will use a swap in order to get the exposure to the performance of these metals. And we have an investment committee that will be held annually in order to be able to rebalance, reshuffle the portfolio depending on what happened in the market, and especially depending on any um, research and development evolution that will probably change the technologies and so changing the metals we need. So that's the way we process our Ofi Financial Energy Strategic Metals Fund.
Well, I'm sure this was very interesting for all of our viewers. Benjamin, as we have discussed, we will need a very large amount of metals to complete the energy transition, but their extraction is known to have an enormous environmental impact. So the question here is, can the need of metals be balanced with the growing focus on environmental impacts?
That's a really good question, Teresa, and a really interesting one. What I want to start with on this is that you have to remember something that Madonna said in the 80s. We live in a material world. Okay? So, what I'm trying to say is that people have to understand that if you want to have an economical activity, the first step is always to dig in the earth crust to take some materials and to transform it. You have to accept it. Um, Bill Gates put it in another way in a conference at Stanford a few months ago. He said, "People who told me that they will save the world by not investing in polluting companies have to explain to me how they will make planes flying with Excel spreadsheets. At one time, you need fossil fuels, you need plastics, you need copper, you need aluminum, you need steel, and all of this is in the earth crust. So, what we have to take into account is that we will have to make to dig in the earth crust. What we should care about is that we should make the holes in the earth crust that will have the minimum impact on the earth crust and on the biodiversity and on water consumption, and CO2 emissions. And here you have to consider that if we develop renewables, that means that we will probably consume more metals and we will have to dig more holes and more mines in our earth crust. But at the same time, that means that we will stop to make any uh, to take anything from fossil fuels. And when you look at the balance, it is highly positive if we develop metals mining and we stop using fossil fuels. Let me explain. Fossil fuels are responsible today for almost 70% of all the CO2 emissions on Earth. Okay. At the same time, metals altogether are responsible for 15% of all CO2 emissions. Okay, and especially you have to know that as part of this 15%, steel is responsible for 70% of this 15%, and aluminum is responsible for 20% of this 15%. So all the other metals together are responsible for less than 1.5% of CO2 emissions in the world. And you have to know that also on aluminum and steel, there is a lot of research and development right now to reduce CO2 emissions linked to their production. So I think that definitely here on the CO2 aspect, it's a clear benefit to use metals rather than fossil fuels. When you look at water, it's also the same. You need a lot of water to extract oil, especially in the enhanced recoveries technologies. And you need also a lot of water to extract coal, especially to limit the dust that will fly in the air. So you need a lot of water for coal production. So when you look at all in all on the water aspect, again, metals are probably a better solution. And finally, on the biodiversity aspect, indeed, when you dig a hole in the earth crust, you will have an impact on the biodiversity. But the kind of materials that we take out of the earth crust by mining is far less than by when we use fossil fuels. It's uh, at a scale of 10 to 100 between both of them. So definitely, I think that yes, indeed, mining is having an impact on the biodiversity, CO2 emissions, water consumption, but it's far less than one we have today with fossil fuels. So definitely, this is the way we should take right now.
Thank you very much, Benjamin. This was a very current topic. Another current topic is that since he came back to the White House, Donald Trump has implemented some actions that seem to go in the opposite direction, such as increasing fossil fuel extractions or removing financial support for electric vehicles. So, how do you think this will affect the market of the metals?
Not that much, Teresa, hopefully. Why? For two reasons. First thing, you have to understand that uh, the International Energy Agency published a report a few months before Trump's election. Okay, so uh, even before the Trump's election, it was said by the IEA that between 2023 and 2035, the United States will represent only 9% of all the new installed capacities of renewables around the world. So this is not where things happen right now. This is quite funny, by the way, because people think that China does nothing for the energy transition. China is the most active country in the energy transition. 60% of all the solar panels installed in 2024 were installed in China. More than 50% of all the wind turbines installed in the world in 2024 were installed in China. More than 60% of all the electric vehicles sold in 2024 were sold in China. They are leaders on nuclear, they are leaders on hydrogen. So it is far more interesting to look at what happened in China than what happened in the United States. More than this, I think that it will be a big mistake from Donald Trump to completely get out of subsidies for the energy transition. Why? Because that will mean that it will let the place completely free for China. And even if he doesn't like this and he want to rely on fossil fuels because they are highly it's a high asset and a high advantage for their economy compared to other countries, what I can understand, he can't ignore that in the future we will need more renewables, and so not helping the US industry to jump in that field will be a big mistake, by the way. And finally, you have to also to keep in mind that Trump is just assuming that what he thinks about fossil fuels by using this mantra drill baby drill. But Biden was pro fossil fuels also during the Biden administration. Fossil fuel production in the United States went up by 2 million barrels a day. Okay, so the United States were always pro fossil fuels. It doesn't change that much. Finally, uh, you have to consider that the United States are the United States, meaning that it's an agglomerate of different states that have their own laws. And for example, you talked about electric vehicles. Indeed, Donald Trump ended subsidies for electric vehicles, but at the same time, California said that they will replace the federal subsidy with uh, a state's subsidy in order to keep the advantage for consumers on the electric vehicles. So I think we should be pretty confident that uh, the, the 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 trend on the energy transition in the United States will not change that much with the Trump election.
Well, we will be watching very closely the evolution of the metal markets in RankiaPro. Benjamin, you have stated several times that metals are the new oil. So I wanted to ask you, do you believe that the replacement of fossil fuels with low carbon technologies will be completed this century? Do you think in 100 years we will be at that point?
It's a really difficult question. I hope that in 2050 it's probably too optimistic, but I think that somewhere between 2050 and 2060 we will be massively our economy will be massively based on renewables. but I think we will probably get to the point where we will be net zero in terms of emission. But for this, we really have to accelerate. I think that it will be the case for a simple reason, Teresa. The impact of the climate change is uh, every day more visible. Okay, and I think that at one point, uh, this is what Mark Carney, the former Bank of England head and now working for the United Nations, said in a speech a few years ago, talking about horizon tragedy. Okay, saying that politics are looking at 5 years when you should look at 50 years. But I think that now we see more and more examples of what the climate change can do. I think that politics will have to be more concerned between this situation, because now climate change is not a 50 years from now problem. It's a today's problem. So they will have to take this into account. And so we will probably have to accelerate on the energy transition, which makes me quite optimistic.
Thank you very much, Benjamin. Well, that was our last question for today. We are sure this interview was very useful for all the investors watching. Once again, we want to thank you for finding the time to be with us today, because we know you are very busy. So thank you very much.
Thank you, Teresa. Thank you for having me.
I want to thank all of the people watching. As usual, don't forget to share this interview and follow us on LinkedIn. Until next time, goodbye.